for staying tuned with ADBN Television, here on the Market Report Show, where we bring you the latest information concerning national economy, global economy, and we are focusing on global economy at this point in time. Particularly, the falling crude oil price has become a major economic development in recent time. 8 consecutive times, the price of crude oil fall. Now, let's check out what is really happening. Yeah, right now, I have Dr. Engineer Wisdom Enang joining me. Doctor, a very good day to you, sir.
Good day. Thank you very much for inviting me.
All right, so let's get straight to the issue. I know you must have been following the development, but the question that will come from every average individual who has been following up on what is happening globally is the current crude oil price. What is behind it?
All right. I think let me explain. The crude oil price is typically controlled by policy decision by the stakeholders, and then of course their demand and global growth in the economy. So those are the 3 parameters that control it. But so that I do not get everything muddled up for your listeners, I'm going to get straight to what is causing this particular price trend. So recall when the president of the United States came into power, right about December, and he started signaling his intents. And I think that set the paradigm for what was going to happen. Because essentially, we had come from a time where the previous administration promised that they were going to cut anything that was going to do with, petroleum sort of investments due to the weather issues and all the climate related issues. And then to Donald Trump, who said, look, I'm not going to take that as a reason. I'm going to go full stream. And so that already set a policy direction for the rest of the world, because the US is a big player.
Exactly.
And so, though demand started increasing at the beginning of the year, and prices were climbing, a number of things has led that to reverse. As early as, the latest one, 30th of July, we had $70 per barrel. And now we are down to about 62.7. So what happened is, people understood the policy direction of Donald Trump, but they wanted to see whether or not that would be matched with actions. And so they were anticipating in the industry an EIA report, which is the USA Energy Information Administration forecast for what prices were going to be. And that sort of talks about the actions of what the US is doing and what the global players are doing with regards to the crude inventories, and also talked about demand forecast and economic growth, which are the other factors that I talked about that affects pricing. So what do we know from this report? We do know that the US EIA are forecasting that spot prices of crude will go even less, up to $60 per barrel in the 4th quarter of this year. And they're saying that this is going to be based on, the global supply. Greatly outweigh the demand for petroleum products. And, the US is one of the biggest suppliers, and are going to be supplying a lot more because of their forecasted production. In fact, the US have said that they're going to increase their production to a record 13.41 million barrels, and so they begin to actualize that based on increased world production. So that's one of the angles that the EIA is taking it from. Now let's look at another angle. On August, I think 2nd, the OPEC Plus agreed. They came together and agreed to raise their production by another 547,000 barrels per day for September. So that already tells you that they want to hike production. And the reason they want to do this is there's a struggle for market share. There's a struggle between the OPEC folks and the US. And so there's the struggle for market share. And on top of it, there is another increment agreed, that has been agreed upon, and that will be coming from the UAE under OPEC. And that will be adding a total of about 2.4 million barrels per day, which is about 2.4% of the global demand. That will be adding that to the market. So think about what the US is adding and what OPEC is adding and then, begin to understand that the fall in prices, first, the sort of slight change in prices at the earlier part of August was because people were anticipating the EIA report, and they were sort of holding back and thinking, let's stop trading activity. So if you look at the trading volume on that set date, it was very low because investors were doing what we call the wait and see approach.
Exactly.
But as the EIA report has come out, it became a sharp decline because investors now know the direction, and they're going to be slowing down on a lot of the a lot of investments. So I mean, it's a mix and match of policies. But I mean, for me, I cannot say this. I'm not talking about what does that mean for Nigeria.
Exactly. We are coming to that, Doc. We are coming to that. But let's explain the global perspective first. Go ahead, sir.
Yeah. So again, it's a mix of policies, and again, if OPEC on September 7 come back with a different policy to cut, if they are suggesting that they may cut, then it may change the entire landscape. So everything as we know it is a mix of the global policies that are taking place, the growth in the economy, and the demand for the fuel as we know it. As you know, I mean, the US initially signaled not even funding projects that have to do with petroleum. And you even saw it at the time where Europe were also even at the point they had to even rush back to coal because they were having severe winters, and they were having gas wasn't coming through from Russia where they were expecting gas. So there's been a lot of shift in the demand, there's been a lot of shift in the supply, and also a lot of shift in the whole production dynamic. But I think with the US bold step now, it now shows that that's a rekindled support for petroleum energy. It's better. It means that even US funders like BlackRock, who have a lot of money, are going to be talking about making the investments into the crude production. And so, I mean, if Nigeria can get its crude production down to a level, production cost down to a level where it's reasonable, then I mean, we might be able to tap into such results. But there's something I want to tell you, right? There is a catch, right? So each time we have this sort of undulations in pricing, the prices will start up and maybe going down for certain reasons, but there is a threshold where those prices cannot go kind of beyond. The reason is this: if the prices go too low, then at that point we may have the cost of production for most of the shell producers in the US, it will go below their threshold, and they cannot produce anymore. So that will now kind of mean that there will be now those people with the high production cost will start cutting their production because it's not profitable. So if that goes on, only people like the Saudi Arabia and the UAE can survive because they can produce at about $15 per barrel.
Exactly.
But Nigeria was still struggling at about $30 per barrel, and the US share is at about 45. So what I'm saying is there's a decline, but it cannot decline to infinity because there's a point where the investments that produce this oil and gas become unprofitable if we continue on that decline trend.
Exactly. Well, I really understand where you are going, because particularly we remember what happened in the COVID period where it went as low as $20. So that's why I'm saying that it cannot go that low. But let's take a look at the geopolitical tension around global oil price. We have seen the threat of US against India, that India should halt its buying of Russian crude oil. We also see the threat of this coming to peace with Ukraine and Russia coming up also. All these geopolitical tension, how do you see them fizzling into this global crude oil price dropping? Does it really have a play on it, or is just
absolutely.
Go ahead.
Because let me tell you how it's going to work. Russia has produced oil. They have a fixed storage capacity, and they want to sell their oil, because if they do not sell that oil, and they reach their capacity for storage, then they'll have to dispose it somewhere. So for them to be able to sell that oil, they would continue to slash the price. So today, US is targeting India. Then very soon, in fact, they might slash the price to a level where other countries start coming to buy. So how many countries are you going to sanction? It's kind of like a chicken and egg game. I mean,
exactly.
You're trying this approach and this is coming this way. So it's dialogue that is going to work. If you go down that route, they can do what Saudi did in the past. They can slap the price to a point where no US supplier can even produce at that price.
Exactly. But let's quickly take a look at the demand side of all this and how it will shape global energy demand. Particularly, when it became so hot for Europe, they ran to coal. But at this point in time, the rest of the world who also depend on fossil fuel, where would they run to?
I think, when you typically look at the demand curve, the demand curve starts up at the beginning of the year, peaks mid-year, and then starts going down, right? So that is what the OPEC Plus, for example, when they increased their production capacity by the 547,000 that I said, they were banking on the fact that, okay, with slow growth expected naturally as we go towards the festive seasons in China and production hubs in the US, that means the price will go high. That was the justification for the price increase and to also get market share. But if that does not happen, I mean, in life, we can always put up an economic model, but it's just as accurate as, the fundamentals allow it to be. If that does not happen, then the prices, the demand on the other side will, would keep going up, and then the prices will crash until that point where I told you it becomes unprofitable for sales to happen.
Exactly. Now, let's now take a view of the positive aspect of it. What gains will the global economy derive if the price of crude oil continue to fall? I've heard energy economists arguing that the current global inflation would definitely benefit if the price continue to drop. Do you agree with that sentiment?
I agree, because transportation is about 20 to 25% of the inflation factor. So once the cost of the crude itself falls, the cost of the refining products will equally go down. And, assuming the countries don't have subsidy, that's the catch, though. Exactly. And then the consumer price index will fall accordingly in most parts of the world. But, again, for nations that are monoproduct economy like us, it will suffer a bit, because it means we are going to be selling more of our inventories for less of the money, and that means we're getting basically less than we ought to have gotten. So Nigeria will have to come into a point where they decide whether to cut production or to keep selling, because you're basically selling a finite resource at a decline value, and so that means you're earning less than potentially you could earn. And then that calls for a retrospective consideration about how we do things, because assuming we had storage facilities, this wouldn't be a problem. You can do the excess and store it, and then when there's a peak in price, you can sell. But without the storage facilities that allows us to store for maybe a year's worth of Nigeria consumption, we don't have that chance.
Very interesting. But further, deepening this discussion further, let's domesticate this recent development as against the Nigerian economy. You could recall that 2025 budget would depend on this crude oil with about $75. A further drop to 60 will become a damage. But from your own understanding, how do you think the government should react at this point in time with this recent development coming from global crude oil price dropping?
The way the government will react is maybe a model similar to what you would do if your finances reduce. You either find more ways to earn money, or you spend money more prudently and then produce a scale of preference to sort of champion your expenses. I think that's the way forward. Look at the big projects that we ought to execute, and the projects that are going to get good returns on investment, those ones are going to open up our economy further. That should be the prime focus, because even if the money is not coming from us, but you could initiate sort of an investment that will open up that sector for other people to come and invest, take it like a seed investment. That's potentially something that you could consider. Looking at in the way you structure your execution of projects that can open up areas for further investment. That should be a primary focus. Other than that, we would have to sell more of our oil, and potentially sell more of the oil and get and be able to get the money whatever comes, because if we cannot meet the funding by selling the same oil we thought we would sell at that price, we have to now sell more oil at the reduced price to be able to balance the equation. But in all of this, I think it favors the crude back loans because I think they're typically based on barrels. And so if we're giving the barrels at this point that is cheaper towards our crude back loans, maybe that makes sense, you know. So Nigeria just needs to become more prudent and then, of course, open up earnings from its non-oil sectors, but not so much expectation from the taxation sector because you can't really tax what you don't have. So
exactly.
The drive should be opening up the sectors, not really trying to say, okay, we're going to count this X, whether they've not had the tax or not, because you typically can't tell exactly what is coming into your tax system until it actually comes through.
Exactly. Now, but let's not also deepen it further into the rural economy, the urban economy, particularly PMS price in Nigeria. Just yesterday, when this fall in crude oil price, started showing a more negative on global crude oil index, Dangote this morning came out and reduced its ex-depot price of PMS to 830 naira. But we see that our importers of petroleum products are not taking their own decision on that. But looking at this situation at this point in time, what do you think will happen to PMS price in Nigeria as the crude oil price keep falling?
So, I mean, typically we should expect a fall in the PMS pricing. But again, you need to understand that there are a couple of factors that affect PMS pricing in Nigeria. So one is the price of the feedstock itself. The other is the cost of production of the crude itself. The cost of production of the refined products itself. The other is the other one is looking at whether or not we are importing this crude and bringing it in country, and whether that means that we're having to deal with the exchange rate issues. And then that, of course, then talks about the next issue, which is the exchange rates. So, if the crude prices stay this way, but because Nigeria is not getting the money it requires to support the Naira further declines to about 1,006. What do you think is going to happen? It means that when the dollar value of the refined product could stay the same, right? Because maybe the Dangote, for example, is importing WTI variants to refine. But because we are dealing with a more eroded, for lack of a better word, exchange rate in this example, then the prices will increase ultimately in Naira. So you could have a slight decline in dollar, but a wider increase in Naira because of the exchange rate.
All right. Let's also take a look at another aspect of the petroleum product that which I know you are very, 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 impressive to discuss. That is gas. How will this also shape the price of gas going forward?
I think they are both interlinked. Gas is also going to have a decline as well. So they're very much interlinked, and very well so. That's what I expect to happen.
All right. Now, Doc, the aspect that I've told you the last time you're on the show, we need to quickly take a view of. The Niger Delta state are making moves to ensure that gas become one of their hub in terms of industrialization. We have seen a move done by Akwa Ibom State, and we also see recently Delta State as also making a move. But what do you have to say about this gas hub and industrialization plan of Niger Delta State in Nigeria at this point in time?
I think it's very important. I mean, I think the governors of the states now realize that you cannot industrialize your economy without consuming the energy, and so the reason down to the challenge that we need to build an infrastructure. We need to set up the entire infrastructure to be able to industrialize our economy through gas, and I think that's a very laudable thing to consider. So for me, it's a good way to extract some primary, secondary, and tertiary linkages from the oil. Because think about it, the oil that we're just selling is about 15% of the value chain. We still have the gas, we still have the petrochemical subsectors, and all of that comes from it. Even fertilizers come from gas. So by setting up a gas infrastructure, you're not only exporting the crude, you're also allowing yourself to industrialize, and because gas is the feedstock for power, basically, you can think about it and you have enhanced power, better manufacturing, conditions for companies that set up manufacturing blocks and all of that. So there's a lot of gain that we can potentially get from this deal. And I think it's really laudable that the government of the day is looking at opening up those avenues and very well situating it across the Niger Delta corridor is a very smart decision.
Exactly. Even though you say it's a smart decision, but we are still seeing that some of the other states, apart from Akwa Ibom and Delta, are still lagging behind. So what would be your advice to them, going forward? Because at this point in time, I think gas is another gold mine for Niger Delta, apart from crude oil that we have seen. So what would be your advice to other states in Niger Delta, apart from Akwa Ibom and Delta State?
Well, I think we need to replicate such models, but you have to understand that some leaders will take the first movers advantage method, and the other ones will take the second movers advantage method. So the question is, Akwa Ibom and Delta now taking the first movers, how well they perform will inform the strategy of the other states who are just doing the wait and see, and maybe would go on the second movers approach.
Interesting. But you also understand that in this regard right now, the issue of insecurity in Niger Delta is a paramount to most investors. For Delta State, for instance, they are taking a look at whereby PPP arrangement can come in to ensure that they have a smooth gas up and industrialization of their state. But the aspect of insecurity is still a challenge. But from your own view as a player, an industry player, how do you expect them to treat the issue of insecurity that could scare away prospective investors that are hoping they can drag or attract into their domain?
So basically, one thing you need to understand is there are different strategies to tackle insecurity, and I'm going to run through the strategies that I think has worked really well. So you can see that even with minimal technology, just synergy between host community, the local securities, and the government securities, we've had a dramatic drop from about 40,000 barrels per day loss to about 5,000 barrels per day loss. So what can we do to further improve on that and also allow the confidence of investors to open up the sectors is for us to realize that we have maxed out on the sort of gains we can get from utilizing just synergy alone. That synergistic approach has what we call a climax to the potential that it can give. So what is the next thing we need to do? Incorporate technology. We can have a PDRR approach, predict, detect, respond, and recover. So you have analytics, drones, sensors all around the field that can detect and that can predict what's happening, looking at parameters. It will have intelligent, AI sort of, computation and algorithms that will tell you whether or not you're having intrusions or process upsets. It will be able to tell the difference, right? And then you can then go on to detect patterns. So you take you read some parameters, and then you use it to compute and detect patterns, and then from there you can then send that to a unit for response and recovery. I think that's a very clever approach. So we need to understand that there's a limit we can achieve with each method, but we can have multiple methods, that complement each other and give us a better outcome.
Very interesting. Doc, before I let you go, one aspect I know you also be very, very interested to talk about in the area of gas is this aspect that private investors in Nigeria, particularly in the area of gas initiation, we haven't had much of them, but from your own understanding, what is really discouraging private investors in the gas sector of Nigeria? Now that Akwa Ibom State, Delta State is opening their domain for private investors, what should the private investors in Nigeria take advantage of this opening?
So, investments of gas stands on three pinnacles. We have the pricing of the pricing, which is under affordability. Then we have the supply and availability. So we have the pricing is okay. I mean, it's when we look at the pricing of local gas, it's almost at parity with exported variant, only with a slight difference. That's a good one. It used to be lower, but now it's better. We also have the reserve, but what is lacking is the infrastructure. A lot of people know that much of this infrastructure could have been better put in the 80s when things were cheaper. The cost of doing things because of inflation was much lower. But because we missed it, we were only targeting the part of least resistance that we can get from the well to the export vessel. And so we missed those critical gas infrastructure. In fact, most of the gas is not even sent onshore, because if you send it through the same pipeline that carries the crude, then you will back pressure the crude, and then you block up some weak wells. You shut them off. So basically, some of the gas is being fed in the field. So what is lacking is the infrastructure. The government has walked the talk with some pipelines, OBD pipelines, and some other pipelines like the AKK. But we need more infrastructure, because we need to be able to harness more of this gas and then be able to send it to hubs where it can then be used. So the investors are watching to see if there's any move from the government to make infrastructure, and if there's any move to make sure that there are good tariffs. Because if there are good tariffs, investors can come into the midstream and operate the midstream as a business, like in the US. In the US, you have people in Texas that own pipelines. They don't have no crude. They just own pipelines, and for every molecule you send across, they will get paid for that molecule, on the price agreed. So these are things that we really need to do. We do have the Nigerian gas transportation network code. Yes, but is it operational? Has it been able to give flavor to the sort of investment tariff that will be required to run a PPP model? No. So we still need to be able to begin to operationalize our policies and get it to a point where it begins to yield benefits and dividends for the economy.
Exactly. Now, Doc, finally, OPEC meeting is coming up shortly. US is putting pressure on Russia and Ukraine to sit on the peace deal. Also, US is also putting pressure on India not to buy Russian crude. And OPEC Plus are also making their own projection. But from your own analysis, from your own understanding, where do you see this crude oil stopping? When I mean stopping, do you see it going further low, or do you see it just hanging in between what you have analyzed earlier, that it has a threshold, it has a benchmark, it can't go below that benchmark? So what's the projection, what's the prediction in the next 1 month that we have the fourth quarter coming up?
I think there'll be more drops below 60 is where I predict. A lot of production can still hold at that point. There will now be a strategic decision of the powers in contention to decide what they do next, and that will then decide where the market goes. But I think there'll be a fall, mainly because the production still holds till September, and then Russia is going to uppercut the market. Surely that's their strategy. Exactly. So I think it's going to be a fall.
Exactly. Doc, I can't thank you enough, but thank you so much for giving a perspective, a very instructive perspective to this discussion. The falling crude oil price globally, and you have told us there is a benchmark. You can't go below that benchmark, but we are looking forward to have a very stable crude oil price. Well, thank you so much for sharing your time with us on the show today.
Thank you very much. Enjoy the rest of your day.
Same to you, sir. Thank you.